Hello and welcome to the latest edition of Citrus Mortgage Bites from our offices in Sevenoaks. Well, as we know, it's spring, the sun is out finally, and that normally signifies a big ramp up in the home buying market. So the housing market really picks up. And actually, therefore, what we do know about this year, before we start talking about what we're seeing, is a little bit of the background. So we know that the Bank of England have announced inflation is finally coming down. So some good news. Hopefully that means interest rates are going to start coming down in the not too distant future. But we also know mortgage rates have been pretty volatile over the last few months and remain significantly higher than they were 2 and 5 years ago. So particularly looking at those fixed rates. And on that topic, we know there's also about 1.6 million people who are in a product that actually comes to an end. So they're tied into a product that comes to an end during this year. Now that means they're likely to see quite a change in their monthly payments. So when you put all of those things together, you start to go, well, actually, are we really seeing any activity in the housing market? Well, actually, I'm delighted to be joined today by Holly Bettles, Mortgage and Protection Advisor at Citrus. And I'm also delighted to welcome Matthew Cumber, who is the Managing Director of Countrywide Surveying Services. So we've got two experts to really help us understand what we're seeing in the housing and mortgage markets. So Holly, I'm going to come to you first, if I may. So having given that background of kind of everything we're seeing and perhaps everything we're expecting to see this year, is it really the case? Or actually, are we seeing quite a bullish market now?
Thanks, Richard. Yeah, so we've actually seen quite a big increase in clients coming through wanting to move, buy, first-time buyers. And I do think it's a different scenario for which type of move we're talking about. So if we're talking about a home mover, someone who's going to be selling their existing property and buying somewhere new, I think that is a slightly different conversation because the fluxes in the market they're not irrelevant, but they're kind of they equal each other out, because if you're selling for more, you'll probably buy for a bit more, or vice versa. And therefore those fluxes in the market don't hit as hard as maybe the first time buyers, where if you're coming onto the market and the prices have increased since maybe when you started saving, that can be a little trickier. And that's when we just need to maybe be a bit savvy about making sure we take advantage of any incentives that are out there, or freebies, or any of those other things that we can use to just help clients get on the ladder and give them their options to be able to buy somewhere, really.
Okay, thank you. So if I am a first-time buyer, I'm going to come to Matthew in a minute and talk to him about the Rightmove announcements recently in terms of how the housing market's doing, which actually looks really positive. But if I'm a first-time buyer, that feels like affordability just is always slipping away from me. So I've got prices that seem to be going back up. I've got rates that, are probably in line with average rates when it comes to borrowing, but they're obviously a lot higher than they were kind of in a couple of years ago. Can I still get on the housing ladder, Holly? What is it I should be doing in order to make sure that if I can afford to get on the housing ladder, I'm doing the right thing before I go and see that very first property I might just fall in love with?
Please don't go and look at something and fall straight in love with it. Come and talk to your broker. We will be able to give you all of the answers to all of the questions that you have. At the end of the day, use the knowledge that's available to you. Get all that information before you go and absolutely fall for somewhere. I don't like to tell people they can't afford the place that they love. I'll always do everything I can to get them the place that they love. But it does make a big difference to go and have that discussion first. So some of the top tips that I always give to clients when they're looking to move or to buy their first place is budget, budget, budget. We've got to be really tight on what you can afford, not overstretching. We want to make sure you can get the most for your money and actually make the most of that first time buyer status with the stamp duty reduction. But we don't want to push it so far that actually you're eating beans on toast for the next 5 years because you've bought a house. Yeah, and you want to be able to enjoy life and have the lovely house as well. So it's all about thinking what kind of term that you want, what are your pension plans potentially, depending on the age of that buyer or home mover. It's all about looking at what that budget is, building in a bit of, fallback for protection, some income protection, some life insurance should things go a little bit wrong. But we can go through all of that affordability. So it's not just about how much will a lender give you, because actually affordability with some lenders is really good at the moment. We've got some 5.5 times income lenders. We've got some that will do specific things for first time buyers if you earn over a certain amount of money. So there's lots of things out there to help, but it's not always about how much can you borrow, but it's also about how much should you borrow and where you're comfortable at. And I think by having a chat with a broker first, going through what the process is going to be, having a chat about what's available, and then discussing your specific circumstances. It's going to put you in the best possible position to be able to find something that's right for you and that hopefully you do still love.
I think that's really helpful information, Holly. So if you're watching and you're a first-time buyer, there's the message. Look, we want you to go and find your ideal property you're going to fall in love with, but please, please, please speak to your mortgage broker first and know exactly where you stand and know what your options are before you go and see that property you might just fall in love with. Holly, the one last thing I want to ask you before I introduce Matt is just so if I'm one of those 1.6 million people whose product comes to an end in 2024, when is it I need to talk to my broker?
Soon as possible. Most lenders will let you do something from 6 months, but if you want to check in before that, we are always happy to have that discussion, just to give you a heads up as to what's coming. It might be you want to amend your budget or think about things in a few months before you're actually able to do anything. And then we can kind of action stuff from about 6 months out. And that isn't a action it, you're stuck with whatever you get at 6 months out. That's a let's maybe pop something in your back pocket, gives you some options when it comes to the time when you choose to actually put that action in place. But we'll review it for you between when we submit something and when your rate actually ends, and just keep on trying to get you that best deal all the way along. So the sooner you chat with someone, the better. Might not be you do anything at that point, but have the chat, and then at least you know you've got your plan and where you're going with it.
Fabulous. Holly, thank you very much. And now I'm going to introduce our other special guest today. Huge warm welcome to Matthew Cumber. As said before, Matt is the Managing Director of Countrywide Surveying Services. Matt, you were with us a few months ago. I have to say, at the time, you were fairly bullish, actually, in your prediction of the housing market, even though all the other dials I was looking at were a bit more negative. And from what I'm reading at the moment, actually, you got this right. So I thought it'd be great to have you back just to kind of go through things again as we are entering a peak home buying season, and a couple of bits just to intro. I'm very mindful about the recent announcement in the budgets around holiday lets and the changes to what happens with holiday lets. Also, kind of Holly's just been talking us through some affordability and rates being, just higher than they were a couple of years ago, which we know about. But then I'm reading some Rightmove information. So according to Rightmove, average asking prices are up by 1.5% in March, which, although it's still below the May 23 figures, actually sounds quite bullish. And the typical asking price has risen by £13,000 since December, which is the biggest increase recorded by Rightmove for 10 months. So actually, I'm looking at this going, all right, well, this seems like things are looking pretty good. So I guess, look, you get to see a lot of this before perhaps some of the buyers get to see it, because your surveyors are out there, they're putting these valuations on. So actually, look, what are you seeing across the market, please, Matt?
Okay, Richard. Anyway, nice to be back again. So I'm glad I was proved right. I suppose that's the first thing to say. I suppose as the profession goes, from a sort of valuation surveyor possession, I suppose people always look at us as rather a negative sort of profession, but I'm glad to be the optimist on this. Yes, and I have to say our guys are out there every single day talking to agents, every single day on new build sites, getting a feel of what is going on out there on the ground. And you're quite right, Richard, earlier than probably you guys are seeing it when the applications start coming through or the mortgages start coming through. And it's all very, very positive. There are more housing stock to sell. There is a more diverse range of housing stock to sell. There is demand starting to pick up, and very, very interesting. I've seen the figures from Rightmove as well myself. And I suppose that echoes the positivity that's out there at the moment. And there is a bit of a buoyancy, which is great to see. And honestly, I have to say, in previous years, we've just come through January and February as a market, and normally, let's be honest about it, guys, they're the most boring months there are. It doesn't really start going till springtime, and yet January and February this year a lot more buoyant, a lot more positive than we have seen in previous years gone by. So it's going to be interesting to see what comes now with spring coming.
Yeah, and is that across the board, Matt? So you talked last time about some of the variances depending on the type of house and where it was located. What are you seeing now?
Yeah, so I think last time I also said that we were seeing a lot more buoyancy in flats and smaller starter homes, particularly around the first-time buyers market. That is continuing, but as well as that, the more traditional family homes, the more traditional detached properties that probably took a hit really 18 months ago in terms of house prices, they're back. The demand for them is back. prices achieved are on the up. And again, you can see from the Rightmove numbers as well, it's all on a positive way forward. So I'm really, really optimistic about the market for this year. And I think we all should be.
Brilliant. And I guess one last question for you, Matt, and sorry about that. I don't know how much you know about this, but clearly the buy-to-let situation from an affordability perspective is looking interesting, even though I think I was looking at something last night saying that rents are up phenomenally actually over the last kind of 12 months. So we're hearing kind of landlords, buy-to-lets sort of certainly being concerned about borrowing rates on buy-to-let properties. And now we've got the housing-let situation to go on top of it. Are you seeing a big supply come to market of those types of properties?
I wouldn't necessarily a big supply of those types of properties, although what I am seeing is a recovery from last year in terms of the number of buy-to-lets that my surveyors are going out doing the instructions on. So, from 2020 through 2022, there's almost like a 50% reduction in the number of buy-to-let transactions that went on between those years. It's that same buoyancy, proportionally wise, is coming through on the buy-to-let. So again, that's really, really positive. And I suppose just a bit to say on our lender out there, which make a massive difference on the prices that people pay, make a massive difference on their affordability based on their criteria. We are seeing the innovation that we expect the lenders to do starting to come through massively. When the pressure's on, what do they need to do? They come up with weird and wonderful ways to make affordability better for first-time buyers. And overall, they get a lot more competitive in terms of the rates they're offering. And I'm expecting lots more of that to be seen this year. It's really encouraging and really interesting.
Matt, that's fantastic. Listen, thank you so much. And thank you for sharing ultimately more good news. We love having you on because you normally come on with good news, which is fantastic. Clearly, we've got a situation today, Bank of England announcing no change in interest rates. So that's completely expected. Hopefully the rate reductions are coming soon and we'll start to see that filter through further into kind of the market and also most importantly, the mortgage rates as well that people have on offer. So great to hear about the lender activity too. One last thing for me to do today, which is bricks and mortar bingo. So as I always say, our producer Simon sets Holly and I a challenge of a specific criteria. This month, the criteria is not one I'm familiar with again, like last month. It's for a property with a sea view of up to 3 million. So that will explain why I'm not that familiar with this space. But Holly, you can go first over the property that you picked.
I came in under budget. I'm just going to start with that. Okay. In a world of budget and high interest rates, I came in under budget. I went down to the lovely Weymouth to find my sea view property because I like it down there personally. And I thought I'd get some good value for my money. I got an 8-bedroom property, which they use as a 5-bed house and a 3-bed Airbnb annex with a heated indoor swimming pool and a cinema room, all beautifully done with a load of land around it and still the sea views. There you go, on the table.
Okay, I'll give you that. It is a magnificent property. I'm probably not as far down as you in terms of Weymouth, so I'm looking nearer to Chichester, actually, West Sussex. And probably as much for the name, if I'm being honest, as I think the house is beautiful, but I've never heard of Bracklesham Bay. But now I know it exists, and I just think, what a lovely place to live. What a great place. Mine is slightly different. I've obviously whacked up to max budget because that's what I do. And I just think the view from this property is simply stunning. I just imagine waking up to this view every day. It's light. The property is so light and so airy, beautifully modern. But this view just does it for me. And I'm imagining entertaining on the terrace. The summer's coming, fantastic. So whilst that may never happen, that's mine for this month. So Holly, thank you. We'll leave our viewers to decide which one they think they would prefer. And Matthew, thank you so much as always for joining us. Really appreciate it. Thank you so much for the update. That's it for today. Thank you for watching, and we look forward to seeing you again next time. Take care and bye for now.